Question, real estate in California. What the Seriously, can someone help? What's an escrow? What's an ARM? What is an REO? What is pre-approval? Can I get pre-approval? Why is inventory so low? Why are interest rates so high? Oh, interest rates not so high? How low is low? How not so high is right.
Before you go down the road of questions, get expert help at championsofhome.com. California Association of Realtors. Who's your realtor?
Hi there, everyone, and welcome back to Real Estate, Real and Unscripted with Nicole Miller. I'm so excited that you are here to join me today, and I have an awesome special guest with me today. Like, as you know, I interview all sorts of professionals with shows that are super laser focused on certain types of categories or subjects that somehow influence or touch the real estate ecosystem. So today we have with us Eric Rosberg, who is the branch manager of U Mortgage, and we're going to be speaking and focusing on the financing process that's available when you are getting divorced. What do you need to consider when you are getting divorced from a loan standpoint? And so he is a specialist in that space. And so hopefully we can go through some really great questions to help you or maybe someone you know, or keep it in your back pocket when you might have someone come to mind. He can help you out, because oftentimes, and the whole purpose and premise of my show is to make sure that you have that knowledge before you say, oh, I wish I would have known that. I didn't do that. Shoot, right? So thank you so much for joining me today, Eric. I'm so excited to have you. So as you know with me, I'm very big on changing the game, elevating this industry and elevating whatever you do. Because if you're going to do something, you got to do it great. And changing things, right? Doing it differently. What makes you, tell us a little bit about yourself and what makes you different? What do you do differently? What is your passion and goal in what you do?
Great question. And Nicole, thank you again for having me. So I'll share this with you. I grew up in Northern Vermont and did a lot of woodworking, and I love the elevate. And I was always told, doing working, that type of thing, measure twice, cut once. Do it right. And also share this to, as a mortgage broker. A lot of people ask, hey, how did you get? And I think a lot of us fall into what we do. And it comes from a service standpoint. And we can say sales. And I like to say sales is serving people with solutions. And what we're going to talk about today is solutions. I'm not advocating for divorce, and I'll share some of my. I was divorced. I'm remarried, so I've walked the walk. Something I'm really, and I think the word passion is overused. Something that I'm very dedicated to is serving people and helping people. And early on in life, so I was a Boy Scout, actually an Eagle Scout. My brother and I are both Eagle Scouts. And for 2 summers, I worked at Mount Norris Boy Scout camp, way up in the woods in Vermont. And I was a rappelling instructor. And if you don't know what rappelling is, it's you're going down a cliff backwards on a rope. So I was tasked with 12, 13, and 14-year-olds going down, and it was about a 50-foot cliff, which is massively intimidating.
Yeah.
So there was the preparation. There was a lot of preparation, making sure everybody was secure. They knew what they were doing, and then guiding them literally backwards down the cliff. And there was times I would have to go down with them. We'd have to throw another rope. That experience, those 2 summers, we would get letters from parents. It was myself and this other guy. His name, called him Turtle. Just the impact that we had guiding these young boys backwards down, and it helped them overcome fear.
Yeah.
Now, fast forward through my career, there's a big correlation with helping people through tough times, whether they're a first-time home buyer. We're going to be talking about divorce, because divorce, personally, it's not an easy. There's for me, there wasn't a lot of it's a lot of emotions. buying a house or selling a house just in and of itself can be, it doesn't need to be, but can be a very stressful time. So you couple that with potentially going through a divorce. There's a lot of guidance. There's a lot of preparation, just like rappelling. Hey, is your gear is your gear on right? And then this is how you go backwards. This is how you take a step down. So that's a little.
I like that.
A little background.
Yeah, no, awesome. So how did you said fall into it? How did you fall into the world of lending?
So it's great question. I was actually in the car business previously, and it's actually I had a friend in the car business, moved to Florida. Again, grew up in New England. Yeah. In 2005, we're still to this day good friends, and reach out to me. He's like, you gotta get out of the car business. So you got to come down, move to Florida. Well, I got married. Mm-hmm. So it's kind of funny, not kind of funny, but it's a fact. I got divorced, small town in New England, in New Hampshire, where I was living, and I needed out. So I said, you know what?
Kind of fell into place.
I called my friend. I'm like, I need a reset at 39 years old. And it's almost a decade ago now, coming up on the big 50, a little bit. And so it was ultimately a divorce, altered the path of my life.
Yeah.
And led me to a life that I love. When I love South Florida, I remarried, met the love of my life.
You guys are so cute.
I just got 3 stepsons, and I get to help people on through some fun times. Like, it's first time home buyers or buying the house. It's fun. It can be a little bit stressful. And what we're going to talk about is it's a little bit more, a lot more empathy involved. And I've walked the walk. So
yeah,
there's always a light.
I think having that background and seeing it through that lens is very helpful. I always say too, like, when you own a house, when you have all that experience, when you've done it yourself, you're able to see and, have the empathy, because it's not just a transaction. And the best in our business are the ones who realize that and, take that to the next level, because these are people's lives that we're dealing with. And obviously, buying a house without all the storyline of the divorce and everything is one aspect, but you don't know what people are going through either. So I think, it's important to work with the right people who can give you that specialized guidance. Not everyone is the same. So having somebody like you who knows that space is very, very helpful. So
I did make some of the things that I don't want to say I coached.
Yeah.
Some of what we're about to talk about, I fell into the trap, we'll use the word trap. Mm-hmm. I made the mistakes I shouldn't have, even going through my divorce.
Yeah.
And even after my divorce, I made some financial mistakes that some people aren't aware of. Some people are.
Yeah, no, and we'll talk through.
Yeah, absolutely.
We'll talk through some of those. Yeah, and I'm going to make a note to circle back, mistakes that you've learned and things that you can share with. I think that from working with people, even in my space, the mistakes that are made that you don't think about while you're in it. So people who've gotten divorced who didn't hire an attorney, and then something came back to bite them years later when we went to sell said house. People who don't hire an attorney for their docs when they're changing deeds. And then you have a whole 12, 13 deed transfer on a property of one of my listings that literally had to be whiteboarded to see if we had a problem. Those are the type of things, and, getting into a divorce situation and realizing that, not knowing all the things that are available to you, and then later only discovering it. So it's really about preparation and knowledge. And that's the whole premise of this show. So I love that. I love that. So, okay, so let's jump right into some questions. Tell us a little bit about just the background and the process. You know this best, obviously. Somebody's getting divorced. They have a family home. they've got kids, they don't have kids, whatever it is. And they're in a process now where one of them is staying, one of them is going, both of them are going. What are some things that they need to consider with respect to your world? What are some things that you may have found through your years people don't know?
Excellent question. So there's so much to unpack. There's so many different scenarios once a couple has decided we're going to get divorced. First call, divorce attorney, divorce mediator, and then a financial advisor and a mortgage broker, lender. The reason for that is they may not know what they're able to do. Mm-hmm. And that's really, once we talk about divorce mortgage, what I'm talking about is called divorce mortgage guidance. That's where I come in as a mortgage broker. It's advising what options are available. So a couple may have qualified, and I'm talking lending.
Yeah.
They may have qualified for that house with 2 incomes. They may have qualified for that house 5 years ago. Mm-hmm. Interest rates were, we'll say 3%. Interest rates were low. We're in a different interest rate market right now. Income may have changed. So the first thing is before the divorce attorneys or mediators are even drafting up, hey, this is going to be the final result. Is that even an option?
Feasible, yeah.
Is it feasible?
Yeah.
Is one going to depart and one going to keep it? Can that be done? So knowing that in advance, knowing what the options are.
Right.
Now, sometimes, perfect. One can keep it, one can move out and buy. We'll talk about equity splits. But knowing the options, because that's where I've personally seen a lot of stress. I've had somebody come to me after, hey, Eric, I just got divorced. I'm keeping the house. The other person is, and then we get into it and find out that person doesn't qualify.
Yeah.
So
yeah.
It really, in the beginning, and if for divorce attorneys, they'll understand that the language is pre-discovery phase. Mm-hmm. So that's early on. Back to the rappelling.
Right.
Is your gear on? Right? Mm-hmm. How are we going to descend or go through this divorce? What's knowing the path with clarity?
Right. No, for sure. And like you started saying, you don't ever want to get to that point. But sometimes that's a new chapter that opens up something beautiful, right? So whenever people say to me, we're getting divorced, I personally don't say I'm sorry, because there's a reason you're there. And I think that there's something beautiful, everything takes you where you need to be for a reason. And so part of making that process smoother and, not making it so negative is being able to get all those ducks in a row and collect yourself and try to make, check and make sure that you're going to be okay. How are you going to do it? And maybe it's not what you thought you were going to have to do. And he might not give you the best of news, but then what are your options? And it's not the end of the world. So I'm very big on keeping the positive light of everything. But when you're prepared, it's a lot easier to put yourself in that position and mind space, I guess you could say. So you have like a designation for this? Like what kind of training did you get, or what do you got under your belt with this?
So
how'd that help you?
So the designation is called a real estate collaboration specialist in divorce. And it truly is a collaboration. Just a real estate transaction, just a lender can't do it. Mm-hmm. Mortgage broker, just a real estate agent can't do it. Just a title company. It's a collaborative effort. And it's really teaming up like-minded people, same mission, to help that divorcing couple. So through that course, I learned a lot about what divorce attorneys do. I'm not going to sit here and say I'm a divorce attorney. Right. I never give legal advice unless it pertains to a loan.
Yeah.
And guidelines, but it gave some additional insight in really knowing how to speak into what an attorney is going to say, and some additional things people don't think about. I'm going to share.
Yeah, share something. Yeah.
So a lot of people And I've seen divorce attorneys do this. You're gonna get a little cringe. This is a little cringy. What's the value of the house? Well, Zillow says, and then we'll take it a step further. We're going to get an appraisal. Okay, so now we have a valuation of the house, and you're doing it as a real estate agent. You're doing a CMA.
Yep.
Here's an appraised value. Here's market value. There's all of that. Through the course I took, it really identified what about inspections. And at first I was like, well, why would we need an inspection? Now I always advise if someone's going to keep the house, have the inspection.
Technically, because they're buying off of you're kind of buying it off of the other person, right? You're like buying out that person. And now there's some shared responsibility effectively for that. Yeah. Interesting.
Exactly. So now if, let's say, the roof is 15 years old and the roof has a leak, I'll use the term, it's really arming the divorce attorney to negotiate the fairest outcome.
Right.
Because if there's no inspection, you don't know that there's
polybutylene pipes and termites in the attic and your roof that you've had for 32 years that's going to be out the door 10 years ago.
or mold.
Yeah.
There's and just because and I've heard this before. I've lived in the house for 12 years. There's no issues. How many times have you sold a house that someone's lived in for 12 years and an inspection report comes back and there's...
I'm under contract for mine now as we speak. And something came up and, it's like, all right, I get it because I'm on that side of the fence and I coach my clients through it and I had to fix it. And I did.
So if there's, I'll use the term deficiencies. If there's deficiencies in the house, once that divorce decree is signed and it's agreed to, that one party is going to buy, well, they bought 100% of those deficiencies.
Right.
Going into it, if you have that inspection, now it's, okay, here's the estimated equity. Here's the estimated amount in deficiencies, whether it's a roof, whether it's...
No, that's a really good point. That's great because I've never even thought about that because I know I had an appraiser on the show, 2 appraisers, and they do a lot of divorce work and, appraisals for that. So we discussed that. And then I also had an inspection company and we talked about something that they offer, which is like home check inspections. So he was saying how, you own this home for 15 years and you're not inspecting it as you go. So you're gonna, and it was great. I never even thought about that, that they started doing this because at the end of the day, you can find out in year 5 that when he's there, if he's checking it every year, someone's taking a glance over, you found the termites before they took over your house, right? You found the water leak that was happening while you were sleeping and didn't know until it became a bigger problem. So those 2 things in compare, kind of thinking about what you were saying, jogs my memory with that because it's true. You don't really know. And so if you're going to get that appraisal, the appraiser is not giving value for the roof being old. Like there's a lot of things that are not accounted for in an appraisal at all. So very good stuff. That's a good point. Yeah.
And it helps avoid resentment or this was not a client of mine. This was actually a case study when I went through the real estate collaboration specialist course. There was a case in California, very expensive house.
Mm-hmm.
Wife kept the house, went to sell it 2 or 3 years later, full of mold. It needed hundreds and hundreds of thousands of dollars, which they could have either found a leaky pipe ahead of time.
Yeah.
Or so it's to protect both parties, negotiate a fair settlement. In addition, I had mentioned title. Always want to do a title search ahead of time.
Mm.
Have you heard of a Y green?
Yeah.
Y green and against
PACE loans. Yeah.
PACE loans. So those loans, they don't show on a credit report.
They're on the tax.
Yeah. And depending on how recently they are. So if I went out.
They're not on the tax yet.
if I got a PACE loan or a WAC, and I'm not knocking the loans, like
no, but the husband could have done it and the wife didn't know. A lot of times people are not involved in the financing, and that, the windows were done that year and they didn't know the husband got a Y green loan or hypothetically.
I had a scenario where this is pretty local to here, just a few towns over. We did everything up front. They had found the Y green, and it was about $12,000 total. The divorce attorney negotiated they were splitting the equity, but they took half of that. So $6,000 off the equity that she was paying back. She was so excited. She goes, Eric, if I would have been so upset if I found out about this on my next tax bill.
Right.
And again, when you're going through a divorce, have so many. There's
so many things going on.
So many emotions.
Yeah. It's not even that you didn't know. Sometimes you just really after the fact, you're like, oh, shoot, I didn't even think about that because there's so many things. So having the right partner that has their own checklist to kind of keep you in line with things like this. Because now I'm like, oh, this is really cool. I didn't even think about those things. New to me. Yeah.
And then what if there's a home equity line? It's open. What if it's a not so pleasant divorce? One partner has access to that credit line, knows they're getting divorced, and jacks up that credit line right before takes the money out. So there's cases but those are things through credit reports, through title checks, that we can identify ahead of time.
No, and that's super important because now that I'm thinking about it and I've looked and rolling through my Rolodex of cases of people, and it's come up where the title. So typically what I'll see is Joe and Schmo get divorced and then there's a quick claim deed that is, in line with the MSA or the, whatever. And the husband signs it over and now and then I've had transactions where the husband never signed it over. And the decree that said that they had to sign it over. And then we had a problem and had to find him. And then it was not pretty. And so, but that when you're saying about title work, right? So they're doing a quick claim deed from the husband to the wife or the wife to the husband. And then there you go. But the quick claim deed was not done with consideration of title. Usually not.
Or debt.
Or debt. Right. Well, they don't do a title search. Now that you've got me thinking, they don't do a title search. It just goes from the husband to the wife and then that's it. Now when the wife is selling it 15 years later, stuff comes up. And the same thing, too, that I realized with my probate, because I do a lot of probate, is that when attorney's doing the probate on the house for Joe who passed away, and then they go and they sell it. And if the attorney knows that they're doing that probate with that property that they know the owners, the potential heirs are going to end up selling, then they need to recommend a title search. Because I've had probates, I'm not even going to go off on this because it will make me cry. It's bad, real bad. I'm sorry, I have one that's bad. It is unfortunate. And then it just kept getting worse. It was like the gift I kept on giving. Started with one probate, wasn't done. Title work wasn't done at that time, put it under contract, turned into 5 other probates down to decades. And then it's still looming because there's a lot of issues. So why get yourself in that mess? So that reminds me about the probate because they don't do title search. Same thing if you're going to sign over your deed to your wife. The wife is unsuspecting. She's got the house. She's going to go sell it. There was no title. So I think one thing out there for everyone out there, when you're going to be in this position, if you're getting a loan and you're going to now have to refinance your husband out, because sometimes you'll see where they'll let her take it over and the husband just walks away and she's now the one, but he's still on the mortgage, right? And then sometimes that happens when you can't afford and you can't physically get yourself a new loan for whatever reason, right? But obviously you have potential options. But if, let's say, my mind is running, right? So if, let's say now you're in a position where your husband ends up, you take the house, you need to get a title search.
Yeah.
And get that deed transfer with consideration of title. So then you will get a new title insurance policy. It will protect you from the past. Everything from the past was accounted for. And then you move forward. Because honestly, Eric, now that I'm thinking about it, I don't think anyone does that. I don't. And the only way you would do that is if you had to refinance them out and it's subject to a new mortgage. And then the mortgage is going to require it. But otherwise, if you're not doing that, you're not getting it. I didn't even think about all that. Yeah, thanks.
It's like an onion.
There's
layers. And you brought up something else that I've seen half a dozen times. Divorce happens 2 years later, 3 years later, someone wants to buy. Credit score is great, income's good. But I do that soft credit check at a time, soft credit check, so it doesn't hurt. And I say, hey, you still have a mortgage. You still have a mortgage. Oh, no. My attorney, mediators, we quit claim me off the deed. Okay. So mortgage is what are the three ways to get off a mortgage? Sell, refinance,
pay it off. Maybe.
There's pay off or pass away.
Yeah.
Which is probate. So there have been, in my experience, I've seen it again 6 times, where they are completely unaware because they're not making the payment. Ex is making the payment. What happens if the ex doesn't make the payment?
Yep.
And so just quit claiming off does not remove the actual obligation to make sure that note is paid.
And then effectively, so car loan, you co-sign with your child on a car loan and they have an $850 payment. And then now you come to Eric and you're like, hey, I'm getting a mortgage. And Eric pulls up your credit report and it says you have an $850 payment for Toyota Motor Finance. And they're like, no, that's my kid's. And you're like, okay, well, there's provisions for that, right?
Correct.
So kid has to show they've paid it. We got to show that, not kid pay you and you pay it. Kid from their account pays it directly for 12 months or lease, right? So there's provisions for that. And then he can eliminate that debt and now not count it against you. But in the case of like this, right? So, husband and wife divorce, husband never removed himself from that loan. Husband has a $3,500 a month liability that's going to come up on his credit report. Wife's been paying it. Are there provisions like the car for that? For debt removal for consideration?
There are. However, not for property taxes, insurance, HOA.
Oh.
So like the car, with proof can be
because you navigate
depending on the loan type too. Now yes, in essence there are provisions, but it still won't remove the HOA,
right? Property
taxes, homeowners insurance,
right? So then if you're looking to shop for another house in the future and you don't have enough debt to income ratio available, that's gonna come back and bite you.
And then you can even dig even a little bit deeper. Let's say if someone hasn't had home ownership in 3 years, they're technically a first-time home
buyer.
So there's benefits to that, lower down.
Right.
We'll go into that. So let's say it's been 4 years or 5 years since you got divorced and you rented, you lived with family, whatever the case may be. You didn't owe. You're like, all right, I'm a first-time home buyer. I don't want to have to put down 5%. So there's smaller things, but there's still things. There's still impact. There's smaller impacts, but there's still add up a lot of small impacts. Again, it brings back resentment. Just those emotions that you don't want to deal with. Do you know what? So let me rephrase that. So divorce mortgage guidance. This is where I get involved in that pre-discovery phase. And it's very similar to taking an application, right? Mm-hmm. I call it a questionnaire. And I talk to a lot of people that say, well, that's her debt or that's his debt, even though you mentioned cosigner. 130-day late on a mortgage. We've seen cases where it's not a friendly divorce. Mm-hmm. It's he's paying, she's paying, however it may be, and it doesn't get paid. That drops someone's credit score 90 to 110 points.
Oh, shoot.
First 30-day late. First 30-day late. So divorce mortgage guidance, the true purpose is so the divorcing couple maintain homeownership eligibility, whether that's to refinance, that's down the road, because once you drop 100 points on your credit, it's a really easy, really fast to drop 100 points.
Yeah.
It takes a long time to bring
it back up.
Recently, this was last year. Again, an unfortunate case, gentleman got referred to me after his divorce. He's like, it was 90 days to refinance. I'm keeping the house. Made plenty of money. Income wasn't a problem. And this is where it really hurts, because I have three stepsons, and I saw my wife. When I met my wife, she was a single mom, and the kids really didn't have that home base. And so this gentleman, 2 young kids, and they had agreed he's going to keep the house. She was staying with family for a while, but they wanted that solid home base. She wanted the money too. Well, they had taken out a home equity line on the house. It was a small one. It's like $30,000. Shouldn't say 30,000 is small, but it's still in the world of home equity lines.
Yeah.
Very small payment. This guy could have paid it very easily, no impact. And I shared, this is what happened to me as well. I had some credit cards that were her cards under my name, and I let them go. This is 10, 12 years ago. So he did the same thing, but he was like, oh, it's just a HELOC. We took it out for her. I'm not paying that. Again, the ego kind of comes in, the anger, the resentment. And he didn't pay it for 5 months. So his great income, but he had on his credit report 5 late payments on a mortgage loan.
Yeah, when you're trying to get another mortgage
loan. His score was just over 500.
Hey.
So at that point, when you're late on a mortgage 5 times, whether it's a home equity line, a second mortgage.
Yeah, the lender's not going to be like, yeah, sure, I'm going to give you another mortgage.
So I know he ended up selling. It was like 6 months later. And again, we look at it. What's not only the best for the couple, but the kids.
Right.
And that was a painful experience for me.
You had to give that.
When you're the bearer of bad news and children are involved, and it
could have been prevented.
It could have been prevented.
Yeah.
Again, back to just armed with the right information, prevent those I wish I knew. And that's always the line I try to. That's actually why I got the designation. Why I work with as many divorce attorneys as possible to try to help to educate them.
Right.
Because we want to eliminate that I wish I knew.
Yeah. No, that's everything for me. It's everything for me, is being able to be prepared and be educated. And because I see it on my end too, all the time. I mean, literally every deal last year was one of those situations. And you're just, I don't think any of them wasn't a situation. I did like 50 something deals last year, and it was like everything had something, like even down to like a seller who didn't have the right buyer's agent that helped her God knows how many years ago and didn't put clauses to protect her from an open permit that was expired before she bought it. And now it came up on hers, and she's fixing the problem that could have been done years ago. Like, that's why I'm very passionate and really driven with the whole premise of this show, is because I've seen all those issues, and I can say, not everyone is the same. Not everything is not a big deal. Like, there's so many things that we can do to prevent so many of the headaches we have. And it drives me crazy to have to be the bearer of that bad news too. And I've had to like coach myself and be like, okay, it wasn't your problem. You didn't do it. It's not your problem. Like, you can't internalize it, but like, being like, okay, this is where we're at, and this is what we have options for, and, be able to make a decision from there. So I get it. So what are some different things that are available to couples, equity buyout, refinancing. Speak to some of the options that are out there. And obviously, like you said, they have to qualify. Where do you step in with different options that are available to people that need to move on from this house and one of them take it on? And what are the steps and the things that need to be considered?
So we'll start with if one of them wants to keep it. We have in that divorce decree, there may be alimony, there may be child support received. The duration of those type of, and I'm using in this example, I'm saying it's as income.
Right. As income, right.
As income. The person that wants to keep it is receiving alimony or child support. It's very important, and a lot of divorce attorneys don't realize this. They're phenomenal at law, but they may or may not know
the implications of what the mortgage is stuff. Yeah, exactly.
Like, this needs to be continued. We talk about the 2 C's. Is it consistent and continued? Is it going to be continued for 36 months? Not 35 months, at least 36 months.
So child is 17 years old and you're getting child support, and next year you're not.
Correct. I have seen set alimonies, and I caught one, and the divorce attorney was phenomenal. She was awesome. She was like, yeah, I'll change that, because she had it set up to be paid out over 2 years. And it was a substantial amount. And the keeping the house, she had been a stay-at-home mom. She went back to work and she was making good money, but she needed that alimony was going to, and it was a substantial amount monthly. And they were super happy. However, said
you can't use it.
The ex-husband. So what we did is we had them spread it out 48 months.
Yeah.
So he was actually happy.
Because it helped. He didn't have to cut out.
She was after a couple of conversations. She was happy too. Once she really saw, all right, my goal is to keep this.
Yeah.
This is the only way I can do it.
Right.
And we could have been set up over 36 and a half months, because there's some time.
Yeah.
But it can't be 35 months.
Right.
So knowing how that final divorce decree is going to be, and that's what the attorneys they'll negotiate based on the goals. As well, I call it a clean break refinance. So if you look this up, it's probably only going to pop up under my name. It's just something I coined. It's a Fannie and Freddie. It's a conventional guideline that I don't know the statistic, but I would say 9 out of 10 loan originators aren't even aware of. Usually they say, hey, great news. We're going to do a cash out refinance. You need to take cash out. We're going to set you up for a cash out refinance. So a couple downsides to a cash out refinance. Number one, you're limited. You can only get 80% of the value.
Yep.
And most of the time when you're taking money out in a mortgage, it's a higher interest rate. So a cash out refinance is a higher rate 100% of the time.
Substantially.
Then if you're doing what's called a rate and term, hey, interest rates have dropped. I want to lower my rate. I want to go to a 30. I have 28 years left. I want to do 15 year and go to a lower rate. So different things. So I call it the clean break refinance. Specifically and only can be used in a divorce scenario. So when there's equity being bought out, and this applies more so if somebody bought, so it doesn't matter when, because if you're only getting 80% of the value, most of the time, a majority of the time, you're not getting enough equity out.
Yeah.
So now you're either, if someone has the assets, now they're tapping into retirement, investments, if that's even an option, or the option is, hey, we got to sell it.
Right.
With the clean break refinance, you can do cash out up to 97% of the value.
Oh, okay.
So 95, 97, yeah. And no, 96.5. You can do FHA as well. No, 97%. You can go up to 97%. Sorry, I had to.
Yeah.
The numbers.
Don't hold him to it. Somewhere around that range. Just better than 80. Remember that.
So that opens up a world of possibilities. Here's the caveats. The money coming back cannot go to the person that's keeping the house. It's only it is a guideline only for divorce scenarios.
Yeah.
A divorce decree has to be involved.
Right.
And another benefit, it's at the same interest rates as a rate and term refinance.
Okay.
So you're able to get more if needed, right? Tap into more equity to keep the house, and you're doing it at a lower rate, aka a lower payment.
Mm-hmm.
So that's and I'll share, I didn't even know, and it's a normal guideline.
Yeah.
I just happened to call it a clean break refinance.
Yeah.
And I didn't even realize it was a thing until I was 2 or 3 years into my mortgage career.
Which is why it's important to work with somebody who specializes in those things. Yeah.
So
that's an option. And then obviously if the one spouse can't afford to buy the other one out, then they're selling. Any other kind of combinations of permutations?
There's ways. I've seen people do home equity lines as well for if they have the equity and they in the boat of that 2.5-3% rate and they have the equity, don't touch that.
I think that's also why a lot of people I've seen over the years that have not refied themselves out, because the rate that they got with the husband 12 years ago was 3%. And then when they were going to get, to buy them out a couple of years ago or now, it was the rate's so good. We'll just hang on to it and he'll sit on it back in the background. And I'll have, I've seen divorce decrees where it'll give them a certain amount of years to pay, to get out of it and things like that. So all sorts of different options, but the rate. Yeah, the rate.
And we can briefly touch on it. There's some mortgages are assumable.
Yes.
However, that may not, if it's negotiated that they're splitting the equity, because most of the time the home is the biggest asset that's being split. So if someone's assuming a loan, however, they've agreed on that divorce decree to pay X amount of dollars, that assumption doesn't give any money.
No, right. The assumption doesn't. Yeah. So if you had an FHA loan and it was you and your husband on the FHA loan and the house was worth $500,000 and the balance on the FHA loan was $400,000, the wife could effectively assume the loan and the husband can be removed out of it. So this basically she's keeping the loan at the $400,000, but if she has to pay the husband out a certain amount, that has to come out of her own pocket. Somewhere. Yeah. Interesting.
So that's, again, you see all these different scenarios.
Yeah. No, for sure. What would you say are some of the biggest mistakes you've seen from homeowners that are divorcing and, stories that
the biggest mistake is the one that I see, where I personally was like that was her. She used those credit cards. She used those credit. I'm not paying them. And that's where I've seen people it's almost a stalemate, and then they stop making payments, especially on a mortgage where they don't know who's going to keep the house. They haven't been educated. They don't even know if it's a possibility, and the emotions get the better of them.
Right.
And then so the payment's not made.
You move out, you separate. The wife or the husband is still in the house, and you've separated, and now you're elsewhere, pending this divorce. And husband was always paying this mortgage, and now isn't or is, and the wife isn't. Those considerations have to be factored in, because then you're going to cause some damage that will hurt in the future.
Absolutely. And some divorces take longer than others.
Yeah.
So if would you ever accept an appraisal that was done 2.5 years ago or a year ago?
Well, It depends.
It depends on what side you're on.
It depends. Yeah, right. In this market, yeah, maybe. It depends on what side you're on.
It depends on what side you're on. So sometimes using outdated stuff. That's really the biggest mistake. Aside from, we talked about the inspection. I think doing the inspection.
No, I think that's great. That's a great nugget.
Doing the inspection
Yeah.
is once, all right, yes, I qualify, or yes, they qualify. Let's do the inspection. Let's negotiate the best possible, because of divorce, it's negotiation. Not speaking to a financial advisor when there's considerable, but yeah. It's the biggest, I'll go back to the biggest thing, and I use the term ego. This is self-reflection, or pride.
Yeah.
One of the 7 deadly sins, pride. I had a lot of pride, and I wasn't paying that because it wasn't my debt.
Right.
I personally fell into that trap, that mindset trap. And I would urge anybody going through or considering, talking about finances, especially in a divorce, not in a divorce.
It's already.
It can be a stressful thing. Addressing it up front is going to save you years of just stress.
Yeah.
So
I think one thing I would say from my perspective on the biggest mistake, just from my experience on my end, is sometimes people think that it might be amicable, and so they could just do it themselves. I've seen 3 that come to mind that it did not end up being good years later. And it was very obvious that we, had an attorney been involved or some legal professional gave it a look over, those things would have been caught. And then we wouldn't have had a situation where years later some loophole was missing and the ex-husband has passed and they didn't sign something. And then or the ex-husband, I'm thinking was estranged. Mm-hmm. Then we had to find him. Debts, like you said, like judgments. Like your title history, important. We've had judgments that have come up from that ex-husband that attached to the title of the property. A few of them that were able to be, they realized the time and where he was and that was removed. And then one of them that was not able to be. And then now you have a judgment from your ex-husband that you divorced 25 years ago that attached to the property 26 years ago and you didn't know. And now you are in a position where you need him and you need to pay off that judgment to be able to close on your house. So I think that's probably in my world, the biggest mistake, is transferring that title without consideration of a title search and title insurance. I know things are kind of swirling in my head right now.
And then when you're working with someone looking to buy a home, and if that divorce, again, so Florida is there's community states and spousal states.
Yeah.
So we're a spousal state. So this applies to primary residence. I'm married. I can't just go buy a new primary residence without Bridget signing. Now, she doesn't have to go on the loan. Mm-hmm. But there's 7 signatures where she has to acknowledge the debt. Sign the mortgage, not the mortgage note, but she's going to go on title. A lot of people, so there's only 2 statuses. You're either married or unmarried. There's no set.
I don't know.
From a legal.
No, I'm saying there's no. There's a middle ground.
Yeah.
It's yes or no.
Yeah, it's either and from a legal standpoint.
Right.
So if you're in the process of getting divorced, it can be I've seen it where I've advised people, listen, she or he is going to need to sign. Is this going to be an issue? I'm working with somebody right now. The contract just got extended. It was supposed to close in October. I just found out this week. Yeah, yesterday. It's Tuesday, yesterday. That it's extended till May. The guy selling it's super cool. It's a weird transaction. Not that there's a lot of normal ones. The gentleman buying is going through a divorce, and he knows she will not sign. And I've seen it at the last minute.
Mm-hmm.
Oh no, he's cool, she's cool, and then at the last minute, all of a sudden they're not, and then all of a sudden they want money to do it. Like I've seen some wild stuff. Yeah. I'll sign it if you pay me $10,000.
Yep.
And that's a tough pill to swallow when you have $40,000 or $50,000 in earnest money deposit and you're being held hostage.
Yeah.
So buying a primary residence, I'm speaking to Florida, spousal state. If you're married, your partner needs to be, they don't have to go on the loan. Like Bridget she's not on the loan. Mm-hmm. But if you look me up on the Palm Beach County Property Appraiser, you're going to see both of our names as owners.
Right. Yeah. No, I'm thinking of all the different circumstances I've had with clients. Yeah. We had an ex-husband that was in another country that was not at all, like no one's spoken to them in a long time. And luckily with that one, digging through with the title, they were able to account for it. And the title underwriter removed one of those items. And because I think it was something with when he was, and because it was his homestead versus not at the time, there were, they'll send you a whole list of things. Mm-hmm. And then, it's like, wait, they have to like break it down and say, okay, was it at the homestead at this time? We were able to get rid of one of them that we were really like, oh shit, like we have a problem, because the wife was like, well, if I have to go after him, he's going to take me for like half the house. Because that's how it was, right? And we're all like sitting there like, oh God, please, please, please. And then when they reviewed it again, that one was able to, thank God. But if it wasn't, then what are you going to do, right? Somebody who didn't sign over the deed because the divorce decree said they had to actually execute a deed and remove themselves and blah, blah, blah. And they didn't do it. And it wasn't done. And he died.
Yeah.
I can't remember what happened with that one, but it worked out. That worked out. There was something that worked out with that one. But like, who needs that stress later? Who needs that stress?
especially when I talk a lot about, we have our bank accounts.
Yeah.
We have our money, we have our sanity, and we have our serenity. And all those accounts, you don't want to withdraw too much from one. You don't want to withdraw from your sanity and your serenity to save a few dollars.
Nope.
And I mean, the reality is real estate it's a huge purchase. And if you're caught in a purchase contract with this must close on or before X date, and then something comes up because you're still married or there's something there, in most cases, I've only seen a handful of times I've seen once where there was no deposit. In most cases, there's a lot of money and there's so many moving parts where let's look at the reality. Where are you going to live if you've already sold a place or you're moving out of your rental, right? You've given notice, and then in the bottom of the ninth, something comes up because of a divorce.
Yeah.
That was, and the big takeaway, Nicole, is that I truly believe all of this can be avoided. All the problems that we're talking about, as long as they're addressed upfront, right? What did I say in the beginning, right? Measure twice, cut once.
Yep.
And sometimes let's take a look at this. Title's got to take a look at this. Your home inspector's got to take a look at this. We're going to double check your credit. But yeah, we could definitely talk about the war stories of times where they were engaged. We're about to close on a house, and everything that she sent us, I've been divorced for 5 years. And at certain points, we don't need it. Underwriting, mortgage guidelines, we don't need a divorce decree. Mm-hmm. If there's no alimony, there's none of that. So if I went to buy a house right now, when Bridget and I bought, I didn't need to show proof of divorce decree.
Mm-hmm.
Like there was no, if it's recent, an underwriter will a lot of times ask for it. So we, clear to close the day before the title company. It is maybe two or 3 days before the title company goes, she's still married. And her fiance didn't even know that she was legally still married.
How did they find that? Like, where did
The
they?
title companies and underwriters, they find everything.
Yeah.
They find everything. And she's like, well, we're separated. Again, back to
Right. And be honest. Be honest
you're
about it.
married or unmarried.
Yeah. Yeah. So in that case, what happened?
Her her husband, right?
Technically
Husband, he was super cool. Signed what we actually, it was FedExed out, signed everything, every day closed. I heard they weren't too pleasant at the walkthrough. I'm sure there was a little bit of bitterness there, but they closed.
Yeah.
So
lots of interesting things. You got me thinking. We think about a lot of things.
Good.
Hopefully
that's why you brought me on.
Yeah. No, I love it. I love it. I'm trying to think. Do we have anything that you may have missed? Anything you want to add? Anything I may not have brought up?
I think listen, there's always going to be that one surprise. I think we covered pretty much everything.
Yeah, I think so too. Other than, I was going to say as agents as well. So I circle back to real estate, circle back to roles as realtors. As agents out there, being able to recognize the type of transaction that you're about to embark on and the nuances that are involved in it. And so, you're working with somebody and they tell you, oh, I'm getting divorced and I'm going to buy the place. Well, then what do you do, right? Like we need to be listening for those things. What are they telling you? What are the clients telling you? What's the circumstances? The seller selling, looking at the deed, seeing who's signing it, saying, oh, you have, you had a divorce, right? And so Joe's on the deed, but why is he still on the tax record? Where's your divorce decree, the MSA? Let's see it. Have your title attorney review it. Oh, it said that you had to have him sign himself out. Well, guess what? If his name is still on the BCPA's website, he didn't sign himself out. Right. And if you're looking at the last deed, it was from 1993 when they bought the place together and it had not changed. And the divorce, decree said that within X amount of days, it had to be, he had to sign. And then you'd ask those questions and they say, oh, he was being hostile. He didn't want to sign it. And then I've had one where we literally, long story short, I was freaking out because the guy was passed away. And then the seller was like, no, Nicole, we had a court order for his nonsense of not wanting to comply. And so I have a court order that was recorded and we found it. And the court order supplemented the deed transfer. And it basically said that because he didn't sign it, this order shall serve as the transfer of the deed, blah, 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 blah. So while it didn't record itself and present itself in a different way, we were able to get that checked off. And it was like, great, because the guy passed away 15 years ago. Yeah. And then how do we get ahead of it as realtors? Because if you see that on your, when you're reviewing before you take a listing, I look at things, I've done hundreds of these, so I can look at it. I'm not an attorney, I'm not giving legal advice, but I can identify, those flags. And if I find ones that are like, the last person who bought it was I bought it from Joe Schmo. My seller bought it from Joe Schmo. It was a warranty deed with respect to title. It was a qualified sale it was sold. The title company did a title search. Great. I'm good. Like that's it. But I start pulling up a transaction and I see 4 different deed transfers between Joe and Schmo and Jane and Doe. And then the next thing is the cousin, it's the mother-in-law. And then they're going back and forth. You have a situation with the divorce, anything that's still showing up. What are we doing in advance before you get the contract? Then it gets sent to title. Because I'll never forget in one of my offices, the agent had said something when I had asked her. I said, send it to our broker because he's an attorney, first off, and have them review this because something's not right here. And I said, you should be doing that. Like we have a broker that's an attorney, like leverage that. And the person literally said, I leave that to the title company. I wanted to slap them. I'm like, wait, hold on. Wait, oh my God, please. So you're going to work on selling this house and then find out from the title company that you have a problem?
Yeah, that's why.
That's why I'm so passionate about doing what I'm doing, because of that. And I'm like, absolutely not. Like, I'm telling you, and she had a problem.
Mm-hmm.
Oh, she had a problem. It was a problem. So can you imagine 7 months later when you went and finally put that godforsaken condo on the market, got it under contract, and then the title search comes back? So we try to find, I try to look at these things in advance to make sure we're not going to put ourselves in that position that we have a dead ex-husband that never deeded it out. And now you're causing drama to your seller, and, or you have an ex-husband that they don't want to contact because there's a lot of drama and baggage that came with that. And now you're in a position where they're being put in to have to contact this person to get them to sign something. Like, we need to be better about realizing and listening to all those cues. And the same side on the buyer side. If you're working with a buyer, what are we doing? Like, getting to know people. What are their circumstances? Oh, they're not quite divorced yet. Okay, great. You're buying this as your primary. Let me explain. Maybe we should wait. When are they going to settle this? Right? Mm-hmm. So it happens so much.
It does.
It happens so much.
It does. And it's so. As a mortgage broker, and if I was a real estate agent, anytime I look at it the same way. Anytime there's a life-changing event, whether there's a death, a divorce, or even a marriage, that's a life-changing event. There's some things are going to change. I would be best friends. We talk about communication. I'm sure you could do a whole special on communication, right? Ultra, I love that you use laser focused communication with the title company, in the case of a divorce attorney, with the lender or mortgage broker. It's imperative that everybody's on the same page and understands, because I know a lot about divorce when it comes to the mortgage, right? I am not a divorce attorney.
Right.
I've closed hundreds and hundreds and hundreds of loans. I'm not a title agent. I reach out to title companies all the time to ask questions. So anytime, it's just mostly identifying and I think that's what we see a lot. Somebody just brushes it aside. Hey, I don't know. And that sounds like a title issue.
Or it's not my lane. I stay in my lane, and that's not my lane.
Right.
Yeah. Even
it's okay to ask questions though.
But I think too, like that's the whole premise of my show as well, is that yes, it may not be your lane, but you need to know enough about everything to be able to be that person in your professional career. Either the attorney should have knowledge about certain things that relate to that sale from our lens. You should have knowledge about what the attorneys are going to consider. And it's not that we're stepping in as those professionals, but we're in the position where we can, if you know all that information, you could be like, listen, oh God, I think we have a situation. I'm going to set you up with the attorney so that they could review this, maybe or maybe not, or let me follow up with you. Let me circle back. And maybe you don't even tell them that. You look into it first and you're like, ooh, I have a situation. Let me see. And then you come back to them and say, listen, I had the attorney look at it. This, I had the loan officer look at it. This, let me connect you with them so you can have that conversation. Because if you don't, and you're just like, in your space of like, oh, this is my job and this is not my responsibility, it's a super disservice. And
absolutely, I think it's knowing enough to know when to ask.
100%. Yeah, perfectly. Yeah,
I know enough that there's something that could go wrong here. Let's find the solution. Yeah. Let's go to the expert. Let's go to the title company, divorce attorney. Yeah.
Well, I'm so glad that we were able to have this conversation. I'm so glad I was able to host you, and thank you for sharing a wealth of information. Let the listeners out there know where they could maybe get a hold of you, website or phone number, if you guys ever need any. And Eric does all sorts of loans, right? So he came on this show, like I said, laser focused. Every show has like a specific, we're not just talking huge generalities, we're digging deep. He can help you with everything. And so this is just one little facet that he ultra specializes in. So if you need assistance in the mortgage space for this or anything, great resource, got connected to you I have a lot of lenders on my show that I got connected to from my own listings or deals I did where, they came and they were, presented to me as the lender for the buyer on one of my listings. And, I vet the crap out of them. And I asked all these questions and
you beat me up pretty good.
Yeah. I don't just get a pre-approval. I ask 1,000,002 questions within, my experience and purview. And so, so let everyone know where they can reach you and find you if they want to hit you up for any questions or services.
Absolutely. So Google is probably got all my information. My Google business page has all my information. It's just Google Eric Rosberg, mortgage broker. Active on social media, not as active as you are. So,
oh my God, I'm not as active either. I'm trying.
Or I actually, I kept my New Hampshire number. So I still have a 603 area code. 603-817-6004.
Awesome.
I can remember. Sent a text, and like you, I come with an educational approach. I like to do a lot of Zoom calls. I meet with people as long as geographically it makes sense.
Right.
I do a lot of stuff on Zoom because it comes down to education. It comes down to and goals. Today we talked about the goal of divorce. How do we navigate that goal? But everybody has different goals, and it's never too soon to start the conversation.
I say that all the time.
It's never too soon.
No, it's never too soon.
Think about my boys. I'm having conversations now. The youngest is 8. I'm having conversations now with him that hopefully impact him far into life. And the same mindset with buying a house. Okay, you're 18 years old. You're planning on you're 20 years old. You're just out of college. Hey, you want to have a conversation? You're 60 years old and you want to buy your first house and it could be years down the road, but it's never too soon it's a conversation.
No, 100%. I'm very big on planning and preparation. And often we meet people and they're like, oh, I'm going to buy a house next summer. And I'm like, great, reach out to the loan officer. No, it's too soon. And it's like, okay, so when were you going to, right? And they're like, well, a few months before my lease expires. And I'm like, oh, absolutely not. You just told me you were self-employed too, right? And you used to work a W-2 and you just became self-employed this year. Okay. So let me explain to you, let's have you talk to the loan officer now.
It's funny. I had people apologize to me. Eric, we're not buying for a year. Eric, we're not buying for 6. We're sorry we're wasting your time. Anytime we're having a conversation with somebody to help prepare them down the road, and it could be that 1 or 2 out of 10 times where they have something on their, and I'm not saying I'm pulling credit day one, we're having a conversation, but they say, hey, I got a bumpy credit or I want to save, just put the plan together. There's a saying, if you don't plan, you plan to fail or something like that. And it's anytime I'm having a conversation about mortgages or home buying, the gym, my boys, it's never a waste of my time. I get excited. I know you're the same.
No, and that's also the differentiator. And, we started this and I had asked what makes you different, right? So having that passion for that education and like he just said, that's not a waste of my time. I urge people out there to align themselves with the professionals who think that way. Because at the end of the day, you can fill in the blank with any big company with a loan officer that has a 8-digit extension number in another state that is only available from 9 to 5 if you're lucky. And then you have someone who actually gives a shit and is going to go through and knows what to give you and isn't just a paper pusher. So that's also a big thing too, is getting in ahead of it. And, I said this on another show, all the ones I've done with loan officers is, getting ahead of it and getting the proper pre-approval done as well before you are in a position where you get news that you cannot proceed forward because you didn't show enough tax money on your tax return then, and you took off too many deductions and now you're in a crowd. Right? So there's a lot of things that are done in preparation. And so I value professionals like yourself who keep that at the forefront. That is everything to me.
Right back at you.
That's everything to me.
Right back at you.
Awesome. Well, thank you so much for joining me. I'm so glad you were able to be on the show. Guys out there, if you got some golden nuggets, if you know anyone who might benefit from the content of this week's episode, please make sure to like and share. And if you have any questions for either of us, don't hesitate to reach out. We'd love to be a resource. Thank you so much for joining us again today. And I hope you have a nice, awesome week. And I'll see you on the next show.
Another app for inventory, one for CRM. Oh, don't forget accounting. Wait, which login was that?
Or you could use Odoo, one fully integrated system that does it all without the hassle. Ditch the app overload. Get everything your business needs on one platform. Try Odoo free today at odoo.com. That's ODOO.com.